Well, hello, traders and investors. I'm L.A. Little. This is your daily NeoTA wrap. We take a look at these markets, and we're doing it from a neoclassical perspective. It means we're looking at supply and demand on the charts, folks. We're using that information to make informed decisions about how to add money to our pockets, right? How to stuff our britches, so to speak. Last week, I was asked, how do you make money on these calls? Right? It's like, and I understand that, I make these calls. You see me doing the broad indexes all the time. Tonight I'm going to share with you a trade today that's still a good trade if you want to get into it. A little bit more risk now than it was then, but I want to show you the setup. It has to do with Tesla. And as you're probably familiar, Tesla took off today, had a nice big spike to the upside. So let's pull that chart up and start with it. And here's the Tesla chart. And so what you had happen today is you actually had this significant bar here break right there at the top. That was the breakout. What did it do? It broke out. They priced it right above it before the market opened. That was the signal. It wasn't the swing point high. It was this. That was the signal that the break was probably going to take place. And if you were waiting on the swing point high to be broken, you were waiting a little bit late. And you can actually see that if you look inside the way this market traded today. And here's that chart of Tesla intraday. This was the spike up, right? Push. There's the swing point high. It's marked here on the charts. And you can see on this time frame, I've got it on a 30-minute time frame here. I'm going to pull that out of the way. You can see that it pushed up in the first 30 minutes, and if you didn't buy that first 30 minutes, you weren't going to get into it. Now, if we pull this back, put it on like a 5-minute chart, you actually had the opportunity this morning to get into this. And if I pull this back so you can see that, and let's get it back just a little bit farther. Here's the gap up area that took place, and it was right there. So there's your gap up, and there's your trade back. And in fact, that is where we traded into this. Now, how did we know that was the area to buy it? And the order that I put in right at the beginning was, let's see what the number was here. Here's my private Twitter feed. 284.84 is where we put the number to buy a couple hundred shares of that. Well, the way we knew wasn't on this chart, even though we got the little under over here that confirmed it once it took place. But in that first 5 minutes, you didn't know it. What you had to do is you had to pull the chart back, and I've blown the chart up here. This is way back, this bar back here was way back, and let me pull this tooltip over, was way back on 7:30 in the morning on 214. So back in February 14th, you had to spike up. This bar you see up here is a swing point high. This bar, swing point high, it got over, back under, right, led to a retrace, eventually got a big retrace, and now we come back up to it. That high, the width of that bar is 287.39. This is on a 30-minute chart. 287.39 down to 284.13. We put the order in at 284.84. Why did we pick that number? Because that's about a third of the way down on this bar. If it comes back, 2/3 of the way down on this bar. If it comes back as it normally should, it should come down about that amount. And sure enough, that's about 285. So we put it just up underneath there, and lo and behold, what happens? Market does exactly what you think. You get the spike down, and you get the little entry right there, very low risk, didn't have to take hardly any risk, push back up. And so the highs held it for 4 bars basically before it took off. And after that, it was up, up, up all day long. That's how you use Neoclassical to make entries. You can find your entries based on the Neoclassical concepts. In this case, a bullish retest regen off the 30-minute bar is what we were just looking at. That's how you use Neoclassical. Let's flip over to the rest of the market here today, what happened. So if we pull back in, take a look at the numbers. Gold, silver, gold was up today, silver flat, oil down. Bonds were up a pretty good piece as the market sold down. You actually had the NDX come back almost to even on the day. You still suffer some gains, some losses in Europe, also here in the U.S., in particular on the Russell. Let's look at the charts, see what they look like and what they might tell us coming into tomorrow. Now, I'm doing a show a little bit early tonight because I'm not going to be around later on, so bear with me here because I don't have the ending numbers on these particular charts. So what do? We pop down now. One of the things I told, here's another neoclassical concept that I pointed out to members at the end of this week, in the weekend broadcast that was broadcast yesterday, is that this bar was going to be the bar that we're going to target. Well, we almost got there. Almost got exactly to that bar. That was the reversal. You do a spike, hammer, reversal. It's not classic in that you didn't get under back over something, but they did buy it exactly where you would expect it, which is exactly what I told members yesterday in the weekly broadcast. So you get the spike back up. You go back into this area again, that's resistance, or at least it's going to probably attempt to get back into that area and see if it can get over it. If it can't, right, then you're going to get this rollover, and that's what I've been telling members is, expect the rollover if this thing gets underneath here. So that's your key spot on the S&P. Now it's different on different indexes, but that's where it is. So today they bought it where they should and where you would expect. NDX, NASDAQ, they've been playing with the tops. The NDX over at the NASDAQ actually failed on it. 592781 didn't quite get to it. 5928 may still try to get there. I wouldn't be surprised if it does. It was a bearish engulfing today on that trade. NDX has been the strength, of course. NDX last week got over it here on the 30th, traded over back under again, traded over back under. On Friday, had more volume. I don't know what the volumes are going to look like. We can try to get a sense of that by moving over to the Qs, and volumes were heavier in the Qs, so I expect volume is going to be heavier on the index as well, probably. And if that's true, then what that means is we're going to see this market try and trade higher again tomorrow in the NDX. Russell, a little bit different of a story. Now the Russell tested into that top breakdown bar 1390.20, got as high as 1389.95. So again, just like the NASDAQ, almost tested into it fully. Pulls back today. We'll see what the volumes look like there. Matter of fact, let's pop over the IWM to get a feel for what they may be. Looks like heavier volume too. And so I expect, given that it was heavier volume, that the Russell once more is trying to tell us that there's still something wrong out here and we're going to struggle to get higher. That's neoclassical in action. That's the markets today. What do we expect tomorrow? Well, given what I just looked at and without looking at anything else, I expect some sort of a mixed market where once more you're going to see strength in the general indexes that are associated with the technology, which is the NASDAQ NDX, and you're going to see the others struggle to try and keep up. Going to get a roll, folks, if this market can't push to new highs fairly quickly. That's it for tonight. Have yourself a great one. I'll see you next time.